Alright, y'all, welcome back to the channel. My name is Aiden for y'all that don't know me, and today is day trading reflection video number 20. Yes, number 20, guys. We made it to number 20. And today is Wednesday. It's been an alright trading week. I believe I am starting the week off red. I believe I am down. I finished today $2.24 down. If you could take a look here, LABD, I profited, but DGAZ, I lost. And I really want to go into details on what I did wrong and what I could have done better, and hopefully come out of today better than I was yesterday, and hopefully y'all will too. So let's go ahead and hop on to this. I already have DGAZ pulled up, so let's go ahead and start with DGAZ. You can see DGAZ this morning off pre-market hours, it pushed down and it just did not pass this SMA line at all today, or at all for, let's see how many days. For the past 5 days, it has not crossed the SMA line besides this point right here about 3 days ago. Other than that, the SMA line has been a nice support, and it's been a proven support. So after tomorrow, if it is down on the SMA line, definitely keep an eye on that. But for pre-market hours, you can see it bounced here, made a new high, and then ended up coming down, and it made this support area at this middle VWAP here, and I drew the trend line there so it could make it more obvious. And then once it dipped below, that's when I took notice. Like, I took notice of you guys and DGAZ and natural gas in general, and this morning during pre-market hours, just because it was moving so heavy. Let me let my dog out. Morning at like 8:15, I was trying to trade natural gas, and this is what I was trying to trade, is this setup right here, and you can kind of see it, that was the idea though, is that downtrending, descending triangle, and then it finally broke out, and it actually did push up just that little bit. But that's what I saw in the pre-market hours. It pushed up and continued. I didn't catch it. I was too late. But overall, you guys and natural gas for pre-market hours, I was very interested in. It pushed down, it pushed up, and then it made its supports and resistances, and that's what I like to see. And I was just trying to get it to be consistent. You know what I mean? Trying to find that consistent, that proven support and resistance. So once I did, and once I found that proven support and resistance, which was right here at the 269.12 area and then the 274.65 area, I based my buy-ins off of that point. And I also based my buy-ins off of this support line right here, which I expected a breakout, but I didn't buy in for that breakout. You might think I did. I did not. I was trying to buy for this last push right here until it hits that resistance. And if it broke out, then cool. But if it didn't, I don't really care. I just wanted my 1%. And so you can see I bought 3 at 273.54. So pretty much at the top of this candlestick right here, which is not what I was trying to do. You can see as the stock was building the support here, built another support, and then its resistance. I was trying to buy this bounce right here, and so it pushed up, and I just got filled at 273.54. I really wanted to get closer to this trend line right here, and this support line, which would have offered more margin for profit, but it did not. I did not get filled there. It happens in the stock market. But I just played it out to the best of my ability and let it come down, build a support at the support trend line, right? And went ahead, let it bounce, and it only bounced. It bounced a good 1%, right? There's 1%, but because I bought up there, I didn't get that much. It was maybe 0.3, and then I sold all the way down here. You're probably like, whoa. Now, why did you sell all the way down here? Because I didn't want to let it go. I was wanting to get the breakout, because this was a trade that I went pretty heavy in, and I wanted the breakout, and I just didn't get it, and I refused to sell for a minute, and then I finally started trying to sell, and I didn't get filled. It didn't work, It just took me a while, so I lost a little over 1%. Very poor exit point, a very poor entry point. Definitely could have been better on both of these, and I definitely could have stayed green because I was green. I just went to red, and that's a whole different story on your trading strategy. So definitely could have been better, and I definitely wish I would have bought closer to the trend line, which would have solved a lot of my problems. But it's a stock market, bro. You can't control the stock market. Just don't let the stock market control you either. So let's go ahead and move on to LABD. LABD I found attractive. You can see the support areas, the trend line, the resistances. Right, I try to mark them to the best of my ability. And here it has a proven support area right here. So as the stock pushed down, I found it attractive, had nice margin for profit, and as it made higher highs and crossed back this trend line, I went ahead and bought in. I bought in about 4.82, and I bought, 79 shares? 79 shares of LABD at 4.82. And I went ahead, put my stop right there at the 0.5% mark, and allowed the stock to run up as it did in the past, as it proved it has done. Now, the reason I put this trend line right here was to mark this resistance, right? Because this is a resistance. And I wanted to be sure I don't get any surprises. I sold my first one at this resistance, which it did have. I did not want to chance it. I was up 0.95%, almost my 1%. So I went ahead and scaled out of the trade. I went ahead and started scaling out. And I sold half, 40 shares at 4.86. And then I sold the other half at this next resistance point at 4.89. So you have a 3-cent difference, 3-cent difference, which does make quite a big difference if you're playing the big leagues. Even in the small leagues, though, take it seriously. Like, this percentage, it does mean a lot. That's why you scale out of trades, right? In case it does keep going. Like, you're not sure, you just want to lock in profits where you are, but you still want to keep going, keep in play, and see if you could profit more. Then that's why you scale out. And that's what I did. I feel like I did it pretty well. It was all right. I got my 1% on this trade, a little more than 1%, and I left out about 3%. Yeah. There was 3% more to be taken. I didn't get it, so in total 5%, and it actually made highs on the day. So that's how this trade went. It was all right. It was an all right trade. I didn't use much of my indicators. I mean, it was just mainly supports and resistance in these trend lines right here. But the indicators are always good to see when the downtrends are ending, when a new wave is forming. And so, yeah, that's how the day trading reflection video number 20. That's how this day went. I hope y'all can learn something from it, take something from it, and just use your supports and resistances, really, and being able to identify those more clear, and that will help y'all a lot in the long run. So I will see y'all in the next video, guys. Y'all, as always, stay up and peace out.